I'm just letting everyone know as well, I've just hit record on the webinar. So this recording will be made available on our new website in the next couple of days, and you'll receive logins as well. So on that note, I will hand over to Christina and Bradley to take it from there. Thanks, guys.
Thank you, Melissa. Welcome everybody and good morning. I'm Bradley Barnes, Principal at Brentnalls SA. My fellow Principal, Christina Gulliver, and I will be presenting on the COVID-19 economic stimulus packages. Christina will be monitoring any questions via the chat, because obviously we've got you all on mute, but if you've got any questions as you're going through, Christina will answer those. I'm doing the first half of the presentation, and then Christina will be taking over to do the second half. There is slots for questions or slides for questions, but given the amount we're going to cover, I'm not sure we're going to be able to get to any of those talking questions. They'll be via the chat. But if we are happy to take any personal questions sort of following the presentation, our contact details will be at the end of the presentation. So if you have any further questions following, please feel free to contact us. So the areas I'll be covering will be individual stimulus, the cash flow boost, asset depreciation changes, what South Australia government have done in the way of stimulus, and the ATO and what they're offering. And Christina's covering the big topic of JobKeeper, and then just touching on banks and commercial leases at the end. There's a lot in these measures, so we try to pull out what we believe to be most relevant to you, and our aim is that you'll have a better understanding of the stimulus packages and what you're entitled to. Ensuring you get all you're entitled to could be the difference between seeing your business continue and needing to shut the doors. So it's really important. Just a disclaimer, this is all general in nature, what we're talking about, and this doesn't meet your personal circumstances. So just have to bear that in mind. Just a little bit about Brentnalls before we start. We started in November 2000. Providing advisory, taxation and accounting services throughout Australia, and we're an affiliate firm in the Brentnalls group, which has firms in Australia and one in New Zealand. We're a mid-tier accounting advisory firm located in High Marsh. We have these 7 key areas of our business, so growth, both ourselves and our clients. As I said, we started in 2000, so we're 20 years old this year. What a year to be 20, I guess. And we haven't seen too much stranger things happen, apart from maybe the GFC, but we were established back then with 2 partners and 17 staff. We've now grown organically through referrals to be 70 staff and 12 principals. We've loved growing with our clients and seeing some of them grow from small businesses up to 150 million turnover. Security is very important in this day and age. Cyber risk is ever present. So we use dark fiber for all our services for maximum security. We like to provide all of our services here in Australia, so we don't outsource overseas, and we provide the youth of South Australia career opportunities, allowing them study leave to go to university and postgraduate studies. Relationships is very key to what we do, not only with our clients, but with other professionals. We endeavour to connect our clients to our networks. So if we don't know the answer to your question, we know someone that does. Diversity is important. Our firm has a diverse age and cultural profile. We're very proud to have a 50-50 gender balance within the firm. We have the most significant number of female owners of any accounting firm in the state. And we recently came a close second in the 2019 financial review top 100 female-led accountancy firms under 50 million. Specializations is key to what we do. So construction, building and allied services is one of our specialisms, along with health and agribusiness. We have specialized teams who invest heavily in giving back to these industries, including free educational sessions, like this one, and connecting to industry groups and organisations such as the CCF. Community, our staff donate part of their salaries monthly to charities, and we believe that's a crucial part to provide support to the community and not-for-profit organisations. Many of our partners and principals are members of boards for not-for-profits, and we promote that within the firm. And this all surrounds our independence. We're proud to be independent. We have no financial arrangements with any other providers. Rather, having one financial planner or finance specialist for you to deal with, we have many. We like to select the right person for each client on an individual basis, and we do not offer any insurance or investment advice in-house. We're truly independent. So why do we exist? We exist because we generally care about your future. Our philosophy, just quickly here, to increase the profitability and value of your businesses, increase your personal wealth and tax effectively, and protect your wealth and structure. And that's a bit of a circle there, because some of the clients that we've been dealing with for 2 or 3 generations. So as the wheel goes round and you succession out, the previous owner, the new owner comes in and they want to start all over again. So get on to the topic of the day. Where are we now? So this is a bit of a guide as to what we've variously had in stimulus packages over the journey. Seems like a long time ago since we heard about the first few cases coming out of China, but I think it's only 3 months ago now. So this is the presentation is obviously done today, and announcements are occurring rapidly. So we'll just get on. There's some very good information sources. The Treasury website has some very detailed fact sheets on the link there. ATO have an information page on all their COVID-19 stimulus packages, particularly the JobKeeper, which Christina will cover in more detail later, and ABC News will keep you up to date 5 days with no new cases, which is great. So the targets of the federal government economic response were tailored around 3 areas: supporting individuals and households, supporting for business, and supporting the flow of credit. So what did they do around individuals and households? So they increased job seeker and another of other income support payments. Previously, if you were on job seeker, you're receiving about $550 a fortnight. They increased that to $1,100 a fortnight. So this would be for any of your staff that you laid off with not the idea of them coming back, or if you've had a partner that's unfortunately lost their job due to the COVID-19, then they can sign up for this. They've lowered a lot of the criteria that you need to complete to get onto this. So just to make it easier for people to get those payments. And they'll continue for 6 months. An additional $750 to $750 payments to income support recipients, halving the pension withdrawal rate, and a reduction in Social Security deeming rates. The other key measure that they did around individuals was the early release of superannuation. So individuals affected by the coronavirus were allowed to access up to $10,000 of super before 1 July and a further $10,000 between 1 July and 24 September. Now, I know a lot of those were paid out in the last few days. I think Friday was and I think I read that 400,000 people had gained access to their superannuation. It is a tax-free withdrawal, and the eligibility criteria, affected by coronavirus, is that you're unemployed, you're eligible for the job seeker I talked about earlier, or after January you were made redundant, you had your hours reduced by 20%, so you've gone from 5 days to 4 days, or you've had a reduction in income by 20% if you're a sole trader. Now, this is a very controversial measure, and unprecedented is probably a word that you've heard a lot recently. Normally, you can only access your super for financial hardship provisions, and another reason it's pretty controversial is at the moment, everybody would know the markets took a huge crash when COVID came in. So everybody superannuation balances would have decreased a fair bit. So you're taking that $10,000 out right at the bottom of the market. It's not in the true spirit of superannuation, where you have the peaks and the troughs, so that at the end you've got yourself an asset base to draw on when you retire. So, and there is a recontribution strategy going around. So people looking to take out the funds of 10,000 and tax-free, as I said before, and then contributing that into their superannuation fund to claim a deduction at their tax rate, 37, 39%. So, a win-win. Unfortunately, the ATO have come out and said that if they see this happening, they'll deem it a false declaration of the 10,000 that you withdrew. So likely that you'll need to put that back in, along with the penalties that would apply to that as well. So moving on to the support for businesses. Boosting cash flow for employers. So some of you may have already received this payment. I know I've had a few clients that have done so already. This subsidises the wage costs for PAYG tax component of the wages. Typically it's between 20 to 30% of the gross wage you pay an employee. The receipt is tax-free, so you get that money tax-free, but you still get a deduction for 100% of the wages. There are two groups of payments called boosts available, and the minimum boost you can get is 20,000 up to a maximum boost of 100,000. Eligibility criteria, you had to be an ABN holder on the 12th of March 2020. You had to have business income from 2019 or have lodged an activity statement before the 12th of March as above, and you need to pay just $1 in wages during the boost period. So the boost period covers January 2020 through to June 2020 and is reported on as reported in your monthly, quarterly activity statements. And boost 2 is the same amount of boost 1, but split over 4 months if you're monthly and 2 quarters if you're quarterly. So I'll go through some examples as to how that works in a minute. Boost 1, so for the quarterly payers, that will be the total amount of your PAYG withholding for your March BAS and plus the total amount of your withholding for your June BAS, notwithstanding that there is a minimum of 10,000, and our example talks through that in a minute, how that works. Then monthlies, rather than going back and adding up your January and February withholding amounts, they've just decided to times the PAYG withholding on your March BAS or IAS by 3 to get you your first amount of stimulus. Then they'll add together your April, May and June amounts, but that's up to a maximum of 50,000. And an example in a minute, we'll talk through that. So that's boost 1. Boost 2, if you're quarterly, you'll get 50% of your total of boost 1 against your June BAS. So not only will you get the PAYG withholding back on that BAS, but you'll also get 50% of boost 1. And you'll then get the next 50% against September's BAS. While as if you're monthly, you'll get 25% of boost 1 against June, July, August, September. So then I'll show you how that works. So this is a monthly PAYG withholder. They withhold $15,008 a month. In March, when they lodge their return, they're going to get $45,024 as their boost amount, which is 3 times the withholding on that March IAS. So, and then when they then lodge their April boost, they've already used up 45,024 of their allowance or their maximum 50,000. So what they're going to get against April is 50,000 less what they've already used. So 4,976. So if you take the 15,000 PAYG withholding less the 4,000, they're going to have a 10,000. You're only going to have to pay $10,000 towards that April IS. Then for boost 2, because you got the maximum 50,000, you're then going to get 12,500 against each of those lodgements in the next period. So you've got the maximum. That in that example, they've got the maximum 100,000. Example 2 is a quarterly PAYG withholder, and they only withhold $500 a quarter. Because it's less than the minimum of 10,000, they'll receive the full 10,000 against their March BAS. And then they withhold 500 in the June BAS. But as 500 plus 500 is less than 10,000, they'll be capped at the 10,000 boost amount. In boost 2, because they got 10,000 from boost 1, they'll get that $5,000 against their June BAS, and they'll get $5,000 against their September BAS. So when the measures came out, I think a lot of accountants were sort of rubbing their hands together a bit with regards to, a number of our clients would have individuals who get their income through trust distributions or dividends. So maybe we could look at ways to put them on the employ and have them have POIG withholding and therefore have that paid as part of the boost. Unfortunately, the ATO came back and said, set those rules as the 12th of March, which we didn't previously know when it first got announced. But also they'll be investigating any sudden changes in characterization of payments or large increases. So what we've been advising clients is that if you do have a reason as to why a wage has increased, or just beware that you're most likely will be audited. So just make sure that you have all your evidence around that, because they get the single touch payroll data. They've got a lot more data than we think. So how are these boosts received? So they're credited to your integrated client account, which is the ATO activity statement account as such. So in that first example, where we had 45,000 being received against the $15,000 POIG amount, if your GST for that quarter, if you're a trust and your GST for that quarter would have been 20,000 with no POIG installment because you're a trust, the total amount on your BAS would have been 35,000. You're going to get a boost amount of 45, so you're going to end up with a refund of 10. So rather than pay your BAS, they'll then refund you the $10,000 on top of that. Alternatively, if it was 40,000 in GST, and so therefore your BAS is 55,000, you get the 45,000 come off that. So I'd only pay the balance between the 55 and what you're getting in the boost. Also, what they've said around refunds is if you already have a payment arrangement with the ATO or outstanding debts with the ATO, they won't apply any refund that you get from these boosts against that debt. They're actually going to physically refund you the money from this. So that will help those people with cash flow over the next few periods. So yeah, so the debt will obviously remain, but you'll get the cash to assist you through the next few months. So moving on to depreciation rates. The instant asset write-off has increased from 30,000 to 150,000 until the end of June. And the annual turnover for businesses who can get that allowance has been increased to 500 million. So this will be a benefit in your 2020 tax return. We've got an example at the bottom here of an asset that costs $50,000. If you're using the small business pool, you will receive 15% of that 50,000 in year one, then 30% of the balance between, so 50,000 less the 7,500, you'll then get 30,000 of that in year two, 30% of that in year two, and 30% in year three. With the instant asset write-off, you'll get a full $50,000 deduction in the current year. However, if the asset is sold, all proceeds will be taxable. So you buy a truck for $50,000 and then trade it in 3 years' time for 30. That full 30,000 is going to be taxable to you. But if you've traded it in, you've likely got a bigger truck which would have depreciation against it. So they might even yourself out. The eligibility criteria for this is that they could be new or second-hand assets. The limit is 150,000 per asset, so you can make multiple claims against this. And you've had to have the asset first installed and ready for use between March and June. So what this does leave over is the fact that if you did order something prior to the 12th of March and you had it then ready and first installed in this period, it still counts. We'll look at the next one where they're looking at things like that. Motor vehicles are still subject to the depreciation limit, which is currently 57,581. The other thing they announced was a 50% accelerated depreciation, and that applies not only to the end of this year, but also through to 2021. Now, this is going to cover, if it meets the eligibility criteria, which I'll talk about in a minute, this will cover those businesses over 500 million, but also assets over 150,000. So you'll get an immediate deduction of 50% of the cost of the asset, and then the remaining balance will be based on the depreciation usual rules. So taking that $50,000 asset, say that was bought in July 2020 rather than June 2020. Previously, we got the 15%, 30%, 30% as before. The accelerated is you get an immediate 50% deduction of 25,000, and then the remaining 25,000 is on the rates as above. So you then get 15% of 25,000, so effectively 57.5% depreciation in the first year, and then you get 30% of the balance, 30% of the balance. So it's just bringing the depreciation forward. Now, the difference between this one and the other one is that this is for new assets only. No second-hand here, unfortunately. And you use the instant asset write-off first if acquired before 30th of June. There are assets with specific arrangements with the ATO that aren't covered in this. And in this instant, the asset must be ordered after the 12th of March. You can't have ordered something in February, ring up the dealer, you haven't received it yet, and said, oh, can I just push that order back into April? Not sure how, but they're looking into those sort of things. So a couple of the other measures, which I won't go into in detail, is that they've changed thresholds with bankruptcy action. And there's also an apprentice and trainee subsidy of 50%, which covers the 9 months from January to September. So that covers a bit of a bigger period than JobKeeper. So if you look back on the fact sheets from the start, they talk about them in a bit more detail, or Christina and I'd be happy to talk to you about those. South Australian stimulus. So the construction package was obviously a good one. 350 million to bring forward major road upgrades and hospital upgrades. So yet to see that sort of flow through, but hopefully it's on its way. And then stimulus 2 was around payroll tax. So if you had annual payroll of up to 4 million, you got a complete payroll tax waiver for the 6 months, no need to pay it. If your payroll was over 4 million, you got to defer the payments for 6 months. There was also a land tax relief, so quarterly bills can be deferred for 6 months. And there was obviously a lot of talk around the land tax changes in South Australia, sort of back end of last year. And they had a land tax transition fund, which gave you relief against any increases above $2,500 on your land tax year on year. And they were going to give you a 50% relief against the increases over 2.5. They're now going to give you 100% relief on those increases. And they have in recent days announced that if you're a landlord and you've provided your tenant with a waiver of rent, that you can apply after 30 June to have, so it's either a maximum of the amount you've allowed the tenant to waive, or 25% of your land tax bill for the 2021 year. So that well worth getting. And then the cost of living concessions had a one-off boost of 500,000, and they brought forward next year's into this year. The other South Australian stimulus announced was a 10,000 emergency cash grant. So to meet the eligibility criteria, you have to have turnover of more than 750,000. You had to be employing people and your payroll less than 1.5. So that covers all those businesses that aren't paying payroll tax. You had to be carrying on business operations in SA, and you have to be highly impacted by COVID-19 and apply before the end of May, 1st of June. Now, highly impacted has been deemed to be eligible for JobKeeper. So listening to what Christina's got to say about that. So, and finally, the ATO assistance from my side of things. Payment deferrals have been allowed for those payments due after the 23rd of January 2020. Where you had a payment before that date, you can request a remittance of interest charged after that date, but they're not allowing deferrals from there. After there, you can have it deferred and you can have interest remitted, and we've been very successful with the clients asking for that. That's normally, you know, one day turnaround, getting back to us on those sort of things. Existing payment arrangements that you may have can be renegotiated as well. POIG variations. So if you have a March instalment amount and your income has reduced, normally you have to be quite careful with reducing POIG instalment amounts, because if you get to the end of the year and you've reduced it by such amount by greater than 5% of the so if your tax is $10,000, for example, you calculate, and you've only paid $5,000 in instalments that you varied, they're probably going to come after you for a bit of interest because you varied it by a fair bit compared to what tax you were actually due. So they've sort of waived those rules for now, and you can also not only make March amount zero, but if you need the cash flow, you can also request refunds for your September and December instalments as well. POIG withholding variations for employees. So if an employee knows the way that they're set up, that they're due a big refund come July or August, or whenever they get their tax return done, they can go to their employer and ask for their POIG withholding to be varied so that they get more of the cash now. And also the GST cycle, they've relaxed this so that if you know you're normally getting refunds, you could consider changing from quarterly to monthly so that you get those refunds back quicker. Were there any questions in the first quarter? No. I'll hand over to Christina.
So if anyone's got any questions about that section when we move on to JobKeeper, please feel free just to pop them in the chat, and Brad will just respond to them directly. So now we'll move on to the JobKeeper $130 billion wage subsidy package, which was announced by the Morrison government on the 30th of March. The package was designed to keep workers in jobs until restrictions are lifted without sending businesses broke. The uptake of this package has been significant. As of last week, late last week, more than 900,000 employers had registered their interest in the scheme, and already 400,000 have completed their applications. Having spent most of the last 3 weeks assisting clients with determining eligibility and enrolling for JobKeeper, I can say that there are significant challenges in the constantly evolving rules and changing criteria for this scheme. As late as last Thursday, a raft of new rules were released that have now resulted in a number of our clients being eligible for JobKeeper where previously they weren't. There are several opportunities that we see under this package for employers and businesses, some of which I'll discuss as we move through the slides. So under JobKeeper, employers are reimbursed $1,500 for each eligible employee per fortnight for 6 months. The scheme commenced on the 30th of March and concludes on the 27th of September and is optional. If employers wish to partake in the scheme, they're required to complete an application and undertake an enrolment process with the ATO. The initial application process and reporting requirements are quite onerous, and there are monthly reports that will need to be submitted to the ATO throughout the duration of the 6-month scheme. Despite this, it's worth noting that receiving these payments is a lifeline for many businesses and can be used not only to get them through this challenging period, but to place them in a positive stead coming out the other side of COVID-19. So the first step is to determine if your business is eligible for JobKeeper. Firstly, on 1 March 2020, you must have been carrying on a business or not-for-profit organisation in Australia. Secondly, you must have employed at least one eligible employee on the 1st of March 2020. Third, you must continue to employ and pay your eligible employees during the fortnights that you claim JobKeeper. I note that you can claim the $1,500 a fortnight for employees that you've stood down due to lack of work or those that you've rehired. These 3 initial criteria are easily met for most businesses. The 4th requirement is for businesses with less than 1 billion in turnover, is that your business must have faced a fall in turnover of 30% or more to be eligible for the JobKeeper scheme. Sole traders can also be eligible for JobKeeper if their business has experienced a downturn and meets the criteria. So you would think that assessing whether your turnover had decreased by 30% or more would be relatively simple. Although this sounds simple, the test is actually really quite flexible and offers a large number of options. You have the choice of test period and can choose whether you want to look at your income on either a monthly or a quarterly basis. You can also choose which month you apply the test to, starting with March. To be eligible for the first fortnight onwards, you would likely start by comparing your turnover for the month of March 2020 with March 2019. For many businesses, although March was lower than average, and we're finding this quite significantly across our construction clients, it wasn't down 30%. However, the decline in turnover worsened significantly in April. If you don't meet the test for March, you can then look at projected April 2020 turnover compared with April 2019. Practically, this would mean looking at your turnover to date in April and making some estimates for the remainder of the month to bring you to a projected April turnover figure. As I mentioned before, you can also look at this on a quarterly basis for the quarter April to June. There is also now an option to choose to apply the test on a cash basis or an accruals basis. If you don't meet the turnover test, you can look to apply the test to subsequent months until it's satisfied. So for example, if you don't meet the test for March or April, but in May you suffer a 30% or more reduction in turnover, you can then be eligible for JobKeeper from May onwards for the remaining months of the scheme. Now, this is the really important part. You only need to meet the test once. So I'm going to say that again. You only need to meet the test once. What that means is that if you suffer a 30% decline in turnover in April 2020 and start receiving JobKeeper, you can continue to receive JobKeeper for the following 5 months of the scheme, even if your turnover returns to pre-COVID-19 levels in May or subsequent months. Although the ATO will ask you for monthly reporting once you're in the JobKeeper scheme, this is only to monitor your progress and is not to determine your continued eligibility for the payments. If you determine that you're not eligible in the first month, it is very, very important that you continue to assess your eligibility each month and act swiftly to enrol and comply before the cutoff dates if you meet the criteria. As an example, if you have a civil business with, say, 35 eligible employees whose work and turnover dropped off in May by 32%. They did not register for JobKeeper by the cutoff date for the month of May, and by the time they realised it was too late. From June onwards, their pipeline of work returned and their turnover was only 10% less than pre-COVID-19 levels. They missed the opportunity to enrol for May and were not eligible thereafter, and the company has missed out on $525,000. The ATO are allowing businesses that are eligible from the first fortnight in the JobKeeper scheme until the 30th of May to enrol. and are also providing some discretion where you expect a 30% reduction in turnover in good faith, but fall short. So for example, perhaps you estimated a 31% drop in revenue and actual results were 28% down. The ATO will give you some discretion and will still give you access to JobKeeper scheme so long as your initial estimates were completed in good faith. And here's where it gets a little bit more complex. And these were the tests that were released last Thursday. So if you do not meet the basic turnover test, being that you've dropped 30%, for example, April this year versus April last year, there are alternative tests which may allow you to still access JobKeeper. These tests provide guidance on what the ATO sees as appropriate and relevant comparison periods for the 30% reduction calculation to be based upon, where a business falls into one of 7 categories. The first one is where you have a business that commenced in the last 12 months. The second is where you've acquired or disposed part of a business. The third is where you've undergone a partial or full restructure. The fourth is if you have had significant growth in your business. And what they're deeming as significant growth is 50% increase in turnover over the last 12 months, 25% over 6 months, or 12.5% over 3 months. The fifth is if you had you were privy to or subject to drought or natural disaster in the prior year. The sixth is where you have large irregular variance in turnover that's not related to cyclical or seasonal factors. So for example, there may have been a really large contract that your business was involved in last year. And seventh is where you've got a sole trader or a small partnership business where there was sickness, injury, or leave that impacted your turnover. So if you fall into any of those categories, there is different rules for the comparison periods and the calculation of the comparison turnover for you to base the 30% reduction on. Now, each test has different rules, and so I'm not going to go into detail on these, but it's very important that you're aware that these are available to you if your business falls into one of these categories. And as I mentioned, there was a large number of our clients that previously were not eligible. And since these rules have been released last Thursday, they now are. And for some of them, it's meant well over 1.5 million in JobKeeper payments. So once you've determined that you're eligible and you meet the reduction in turnover test, you then need to identify which employees are eligible under the JobKeeper scheme. Full-time and part-time employees are eligible, as are casual employees of more than 12 months who have been employed by you on a regular and systemic basis. Employees must be over 16 years of age, and last Friday it was announced that if 16 or 17-year-olds are full-time students, they will not be eligible for JobKeeper. An eligible employee must be an Australian citizen or a permanent or special category visa holder. An interesting note is that staff on unpaid leave are eligible for JobKeeper. This includes those that are stood down or on unpaid parental leave. The employee cannot receive JobKeeper whether in receipt of the government paid parental leave or dad or partner pay. So for example, if an employee was on their second 6 months of parental leave and was no longer receiving government parental leave payments, they would be eligible for JobKeeper. Similarly, if you have an employee that has travelled back from interstate and is unable to work due to being in lockdown for 2 weeks and is on unpaid leave, they would also be eligible for JobKeeper. Any employee still working whilst on workers' compensation payments will also be eligible for JobKeeper payments. However, if they're not currently working due to incapacity and are being supported through workers' compensation arrangements, they will not be eligible. If you decide to participate in the JobKeeper scheme, and again, as I mentioned before, it's optional, you must nominate all of your eligible employees. You can't choose to nominate only some employees. And this was clarified, I believe, the week before last. There has been a lot of controversy around this in the media, and it is a one-in, all-in payment. Each employee can only claim JobKeeper from one employer, and there are rules around which employer they must claim from. Before enrolling in JobKeeper, employers must obtain a completed nomination notice from their eligible employees. This notice is available on the ATO website and can be printed and provided to your employees to sign and complete. The notice confirms that the employee has agreed to nominate for JobKeeper payments and is eligible, and that they're not claiming from another employer. The notice does not need to be provided to the ATO, it just needs to be kept on file. An employer cannot force an employee to receive JobKeeper. The employee must agree to be nominated, and they have an option not to participate in the scheme. So what about business owners who are not employees? As Brad mentioned before, we have a very significant number of business owners who are paid by way of distributions and not wages. A sole trader or an eligible business participant can claim JobKeeper without being employed by the business. I note that if a business owner or participant is permanently employed elsewhere, whether that be full-time or part-time, they cannot claim JobKeeper through this avenue. Only one business participant can claim per business. So for example, a husband and wife run a civil business and they're paid by way of distributions. They're not paid wages. Only one of them can claim JobKeeper. If there's a partnership with 4 partners, again, only one partner can claim JobKeeper as the eligible business participant. And again, there's been a lot of controversy around this rule. A declaration is required to nominate the business participant, and it's available on the ATO website. Again, this doesn't need to be lodged, but it is required to be kept on file. The business is required to advise the ATO whether they have an eligible business participant as part of the enrolment process. And again, this is an area that should be considered carefully to ensure that you're claiming the entitlements for the preferred business participant, where there are multiple options. And this is, of course, something that we're assisting our clients with. So once you've determined that you're eligible and you have eligible employees, then you need to enrol for JobKeeper. You can enrol yourself through the business portal, or otherwise your BAS or tax agent, such as ourselves, can enrol on your behalf. Initially, you'll need to provide eligibility information, which includes the number of eligible employees and your contact and bank details for JobKeeper payments to be paid into. I just wanted to note that the Commissioner has extended the time to enrol for the initial JobKeeper periods to the 31st of May. Where you have an employee earning over $1,500 per fortnight, there is no change to their payroll processing or payments. Super is still paid as per the normal process and calculation method, and the business will simply be refunded $1,500 per fortnight of the employee's wages. And we've had quite a significant number of inquiries around that and a lot of confusion. So as I mentioned, there is no change to the payroll processing for employees who are already earning over $1,500 a fortnight. Where you have an employee that's earning less than $1,500 a fortnight, the amount that they've earned from working is processed as normal via payroll. And then you need to process a top up within the same payroll transaction to bring them to $1,500. And this is allocated to a new JobKeeper top up payroll category in your software. Super Guarantee is not required to be paid on the top up amount, but it is still required to be paid on the amount that they've earned through working for that period. The business will be refunded $1,500 per fortnight of the employee's wages, which in this case will equate to their entire wage. Where an employee is stood down or on unpaid leave, they will be paid $1,500 top up per fortnight, which will be allocated entirely to the JobKeeper top up category. No super guarantee is required to be paid on this amount. I just wanted to highlight an opportunity, which is that employers can use JobKeeper to pay down leave entitlements until just 2 weeks of annual leave remain. This is an opportunity for employers to utilise the government support to reduce their leave liabilities. Changes have been made to industrial laws so that employers can order employees to work at their usual rate of pay for as many hours as equate to the $1,500 payment. This results in employees working at no cost to the employer over the period that they're eligible for JobKeeper. Again, I highlight this as one of the opportunities to minimise your costs during this challenging period. From my discussions with clients, particularly in the construction industry, staff expecting to get paid the subsidy not to work appears to be one of the biggest issues. If the employee is not stood down or on approved or authorised leave, they must comply with any lawful and reasonable direction given by their employer, and this includes any reasonable and safe direction to carry out work. The first applicable fortnightly JobKeeper pay period is the 30th of March to the 12th of April. Your pay periods continue as normal and do not change under the JobKeeper scheme. You do, however, need to ensure that within each JobKeeper fortnight specified by the ATO, you've met the minimum payment requirements. If you pay your staff weekly, you should pay the equivalent, so for example, $750 per week. If your staff have variable wages and are paid weekly, I suggest that you pay them their standard pay for the first week and then top them up in the second week to bring them to the $1,500 per fortnight, which ensures that you don't inadvertently overpay them. The ATO have stated that you can make top-up payments to employees relating to the first 2 fortnights in April late, so long as they have been paid by the 8th of May. So that was announced this morning. Previously, the cutoff was the 30th of April, so they've given an extra just over a week. So when will I be reimbursed? As you can see from this ATO table, the first 2 fortnights in April are not reimbursed to the employer until May. At this stage, assuming that the employer lodges the required information as soon as they're able to, we expect the first payments to commence in the 2nd week of May. There is a very significant cash flow issue here, particularly for businesses that have been significantly impacted by COVID-19 and have a large number of eligible employees. And it has been widely publicised that many businesses have chosen not to partake in the scheme because they're unable to fund the cash flow shortfall. Last week, the banks announced that they would bolster their efforts to prioritise any business that needs funding to bridge the gap until the first JobKeeper payments are made in May. The payments will be made monthly in arrears, with the last payment being received in October. In terms of tax consequences, JobKeeper income to the business is assessable. There is no GST, but of course that income will be offset by the corresponding deductible wages that are paid to your employees. The payments to the employees are $1,500 pre-tax or gross, and they are subject to PAYG withholding and are reported on the income statements for the employees at the end of the year, just as per the normal process with the balance of their wages that are paid by you. The states are currently legislating to exempt the top-up from payroll tax. As I mentioned previously, super guarantee is not required on any top-up payment, being the component that is paid for hours that the staff member has not worked. Annual and long service leave will still accrue whilst the employee is being paid JobKeeper payments. So how does a business notify the ATO which employees are eligible? If you have single touch payroll enabled software with JobKeeper functionality, such as Xero, MyOb, QuickBooks, or Employment Hero, you'll need to access your software's specific instructions on setting everything up correctly. Again, this is changing daily. Just yesterday, MyOb updated their instructions for how to register employees with the ATO. The software will then report to the ATO the required information when you complete each pay run. If you do not have single touch payroll enabled software with JobKeeper functionality, you'll need to complete your reporting for your employees to the ATO via the business portal. As mentioned earlier, you also need to complete monthly business declarations which reconfirm the number of eligible employees and provide current and projected GST turnover to the ATO to track your progress. I know we've covered a lot of content, but we also just wanted to touch on the announcements around banking and finance and what's available to your business to support you through this period. So despite the big 4 banks being listed here, the most smaller financial institutions are also offering support. And we've found that quite often those smaller institutions are actually getting back to our clients to provide this support a lot faster than the big four banks. Our intel is that banks have been utterly overwhelmed by the volume of applications for assistance due to COVID-19. And they're asking for patience from those applicants. So what is available to support your business? The Coronavirus SME Guarantee Scheme offers loans of up to $250,000, unsecured, with a 3-year term and a repayment holiday for the first 6 months. The government will guarantee 50% of the loan, and these loans are available until 30 September from participating lenders. So are there opportunities here for you to consider? We've also seen significant uptake on the 6-month deferral of loan repayments on loans up to $10 million, which was another announcement on the 20th of March from the Banking Association. Interest does continue to be charged during the 6-month deferral period, and it's capitalised rather than paid. We've noticed that each bank appears to take a different approach in terms of how this is treated, with most extending the loan term by 6 months. Some require the 6 months of repayments to be paid in full at the end of the repayment holiday period, and others have been increasing the loan repayments over the agreed term. So we found that is particularly useful in the construction industry for those that have got a lot of asset finance. And again, we've been finding that those secured asset financiers have been coming back quite quickly in responding to provide assistance to those businesses. Another announcement on the 20th of March is that fees and charges may be waived during the 6-month period. Banks are more open to debt restructures, that these repayment holidays and other changes can also be applied to home mortgages as well as business debts. And that also covers commercial properties. For example, if you were to own a commercial property and be leasing it. One thing though is to be mindful that any variation to loan terms may impact your credit rating. So finally, we'll just touch on commercial leases. Generally, the largest two outlays for a business are wages and rent. Wages have been covered by the JobKeeper scheme, but the government has also provided guidance on negotiations for leases. A national mandatory code of conduct was announced for negotiating commercial leases and applies where the tenant is eligible for the JobKeeper scheme. So as Brad mentioned before, the $10,000 SA state government scheme is linked to your eligibility for JobKeeper, as is this code for negotiating any commercial leases. The code of conduct enforces a moratorium on evictions for non-payment of rent and also ensures that tenants are committed to the terms of the lease. It requires a proportional rent reduction based on the reduction in tenant revenue. So I'll provide an example in a moment. It also requires that the rent reduction must be in the form of deferrals and waivers, with waivers accounting for at least 50% of the reduction. Any rent deferred must be paid over at least 2 years. For example, if you have a civil business that's experienced a decline in turnover of 40% and is eligible for JobKeeper, they enter negotiations with their leased yard and office landlord and apply the national code. The negotiations require a 40% reduction in lease payments based on their 40% reduction in revenue. At least half of that reduction must be a waiver and half a deferral. So therefore, based on that 40% reduction in lease, at least 20% of their lease payments must be waived and 20% deferred. Now, I'm sure you've got quite a few questions. That was quite a lot of content to cover. Unfortunately, we don't have a huge amount of time to answer questions given that this session is only an hour, but please feel free to pop them in the box, the chat box, and Brad will respond to them. So as you've seen this morning, there are a large number of stimulus packages available to you. There is also now significant flexibility in the tests that can be applied and calculation methods for JobKeeper. And it's imperative that you remain up to date with what you're entitled to and are reviewing it on a very regular basis. There is a lot at stake here. And for example, if you've determined that you're not eligible for JobKeeper, but then you are eligible in a following month and you don't act quick enough, that may restrict you from not only being able to access JobKeeper, but also state government grants, being able to negotiate your lease, etc. Daily, there are new rules and grants being announced. Every day there has been a significant announcement. So it's very important again that you're staying on top of that. If you have any questions regarding our presentation, particularly situation-specific ones, please don't hesitate to contact Brad or myself. Our contact details are available on this slide. We both wish you all the best throughout this challenging period, and thank you very much for listening to this webinar. Thanks.
Fantastic. Thanks, Christina and Bradley. Very informative. Apologies, I had to duck in and out a couple of times. Like I said, homeschooling is turning out to be, maybe I just send them to school. No, that'll be next week. But no, thank you for all those that did log in and attend. Like I said earlier, this will be available on our new website in the next couple of days. Any of those who would like to see the link sooner than that, feel free to send myself or Simon an email and I'll send you the link to it. But apart from that, have a great day, everyone. Stay safe and very warm. The weather's about to get really chilly. We're moving to the Antarctica, I think, a little bit. And yeah, we'll see you all soon. Thanks, everyone.
Thanks, guys. Thank you. See you.
Thanks, Darren.